Bitcoin just crashed. What is going on? Should you be concerned? And more importantly, is the bull market over? In this video, we're going to break down the data to answer these questions because let's be honest, these dips make everyone a little nervous. But the best investors, they put their emotions aside and make smart, logical decisions. And stick around to the end of this video because I'm going to share a secret strategy that will help you navigate Bitcoin's volatility like a pro. Trust me, you do not want to miss it. Let's dive in. First things first, this is nothing new. If you've been in Bitcoin for a while, you already know. Bull markets are never a straight line up. In 2017, Bitcoin had multiple 30 to 40% corrections on its way to a new all-time high. In 2021, it dropped 53% from April to July before rallying to 69,000. Even in this cycle, we've already seen more than half a dozen corrections of 15 to 20%, yet Bitcoin has continued to make new highs. The reality is, healthy markets need pullbacks. This is likely another shakeout before the next leg up, and this is nothing abnormal for Bitcoin. The second point is that long-term holders, those who've been in Bitcoin for a while, are accumulating. Mainstream financial talking heads love to dunk on Bitcoin during short-term price dips, but here's something they won't tell you. Long-term holders are not selling their Bitcoin. In fact, they're accumulating. You don't have to take my word for it. You can look and see it in the on-chain data. This chart here shows the Bitcoin price in black, and the orange line shows the amount of Bitcoin that have not moved in at least 155 days. The red and green areas show when long-term holders are selling or accumulating respectively. Notice in Q1 2024 and Q4 2024, long-term holders were selling like crazy, and that makes sense. The Bitcoin price was bid higher, and those who've been holding coins for a long time wanted to realize some gains. Why? Well, that doesn't really matter. Perhaps they rotated into other investments. Maybe they bought a house or took their family on a nice vacation. All that matters is they took the opportunity to sell some coins. Naturally, these coins coming into the market put an end to the respective Bitcoin price rallies. It's unsurprising that we saw long-term holders sell when they did. The rally in Q1 24 resulted in Bitcoin finally surpassing its 2021 high of 69,000. There were probably a good number of people who bought Bitcoin for the first time during that bull market and were waiting for Bitcoin to get back to that level before selling. Furthermore, the most recent rally brought Bitcoin to a nice big round number of $100,000 for the very first time. And for many people, they likely had this as a number in their head, at which would be a point they would sell some coins. Both of these price points have major psychological implications, and it's unsurprising that Bitcoin has spent a few months trading sideways at each level. But what we saw last summer and what we're starting to see again is long-term holders shifting from net selling to net buying. During August, September, and October of last year, long-term holders aggressively reaccumulated the Bitcoin that they sold. This accumulation ultimately coincided with a local price bottom. Long-term holders accumulating coins set the stage for the price to move even higher. Long-term holders accumulating coins set the stage for the price to move even higher after Trump's victory in November brought a new wave of demand to a market with less available supply. Very recently, we have seen long-term holders go back from net selling to net accumulation. It may take a few more months before this has any impact on the price, but make no mistake, those who have been in Bitcoin for a long time are not selling right here. They're buying this dip. Weak hands are being shaken out, strong hands are stacking sats, and the longer Bitcoin trades in this range bound area, the more these diamond handed hodlers will get to stack. So if you're feeling nervous, just know that the people who understand Bitcoin the best are doubling down. The last point is that this is not just a Bitcoin problem. The entire market is feeling this. Bitcoin isn't the only asset taking a hit. Stocks are struggling too. This is a good sign because it shows that nothing has changed that has directly impacted the bull case for Bitcoin. Rather, due to broader economic uncertainty, investors are selling assets. And naturally, due to Bitcoin being traded globally 24/7, 365, it is the most sensitive to shifts in the market tides. So, what are some of these macroeconomic factors? Well, it involves uncertainty around these three things: interest rates, geopolitical tensions and tariffs, and short-term liquidity changes. These things affect every market, not just Bitcoin. But here's the key: none of these are long-term threats. In fact, many of these factors could turn bullish very soon. First, in regard to the Fed and interest rates. The reason prevailing market sentiment is now rejecting the possibility of Fed rate cuts this year is due to sticky high inflation and relatively stable employment and economic growth. But both of these factors are at jeopardy of changing. First is because of something called the wealth effect. When asset prices go up, consumers spend more because they feel richer, which causes prices to go up, which causes higher inflation. But with both Bitcoin and stocks down from their all time highs, this is not going to be at play anymore, which could lead to disinflation returning and the Fed getting back to their scheduled rate cuts. The second thing that could cause the Fed to pivot is Doge. One component of GDP is government spending. Now, I think that's silly because government spending tends to be value destructive rather than value accretive, but nevertheless, this is part of the calculation. While Doge has their work cut out for them, and it's going to be nearly impossible for them to flip this fiscal situation into a budget surplus instead of a deficit, it does appear that some spending cuts are in order, which could result in lower nominal GDP growth. Moreover, the DC bureaucrats losing their jobs will result in higher unemployment numbers. The Fed is adamant about the fact that they are data driven. And for the reasons laid out here, the data could shift into a territory that would give them the justification they need for interest rate cuts. Next is geopolitics and tariffs. Now, unlike other analysts, I'm not going to pretend to be an expert on tariffs. The story around this is constantly changing. One day tariffs are on, next they're being delayed. Nobody knows for certain what's going to happen. And that uncertainty is part of what's causing markets to drop. Investors hate uncertainty. However, what we do know, and we know this because Trump and his Treasury Secretary have talked about it multiple times, is that they want to get long term interest rates down. Getting long term rates down will help stimulate economic growth as well as investments into equities and Bitcoin. Much of the concern surrounding tariffs stems from the fact that they may cause prices to rise in the short term, as well as a drop in overall economic activity. But if Trump and Treasury Secretary Scott Bessent can successfully get long term rates and relative US dollar strength down, everything else will take care of itself. And this plan is starting to work. At the start of this year, the US 10-year rate was about 4.5%, but now it's already down to 4.3%. It may be a grind for the next couple of months, but we're starting to see long term rates trend in the right direction. Lastly, is short term liquidity. Like I mentioned, the 10-year rate dropping will allow many things to take care of themselves, and liquidity is one of them. Global M2 was trending down, but this in large part was due to relative dollar strength. When the dollar strengthens relative to other fiat currencies that comprise global M2, that tightens overall global liquidity due to these currencies being priced in dollars. However, the dollar is trending down this year, just like the 10-year rate. And in Trump's first term, we saw the dollar weaken significantly in the first year. He's looking to execute this same play this time around. So, while short term dips might feel painful if you're new to Bitcoin or don't exactly understand the long term value proposition, these are fantastic opportunities to deploy more capital into the market. And based on the data we've looked at here, I'm still incredibly bullish over the medium and long terms. Now, what about that secret strategy I mentioned earlier? Well, the best way to navigate Bitcoin's volatility is by accumulating Bitcoin every single day, regardless of the price. This way, it doesn't matter if it's going up, down, sideways, you're stacking always. Traditionally, this is known as a dollar cost average approach, but at Blockware, we help investors take this approach to the next level and dollar cost average through Bitcoin mining. Every day, every hour, every second even, Bitcoin miners are stacking sats. However, what makes this great is that they're effectively doing so at a discount to the market price. So, while with a traditional dollar cost average, you've been buying Bitcoin at 70K, 90K, 95, 100, now 85 over the past few months, miners have been stacking at much lower prices. Here's a chart showing the cost of production for an Antminer S21 Pro, one of the latest and greatest Bitcoin miners. Right now, it's effectively producing Bitcoin at a price of $48,000, which is nearly half of the current market price. And this machine has been doing so all year long. At Blockware, we offer mining as a service, which means we've done all of the groundwork. We've built data centers, we've sourced energy, the miners, and handle all of the day to day operations. This allows you, the investor, to become a Bitcoin miner without having to do any of the setup yourself. enabling you to start earning Bitcoin every day, regardless of price volatility. Click the link in the description or go to mining.blockwaresolutions.com/info to learn more. We have a dedicated team of professionals who will answer all of your questions and create a personalized strategy to help you achieve your Bitcoin goals. Make sure to like and subscribe.